You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call Around These Parts, the Option Block. My favorite, hopefully your favorite, online source and bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, some analysis, some unusual activity, and of course, a lot of your questions.
A little bit of options wising off.
That little wising off, he's jumping ahead of himself. You think he'd learn how to do this by now.
No.
But of course, this is indeed the Option Block, and of course, you can find all the good stuff at theoptionsinsider.com, iTunes, TuneIn, Stitcher, as well as via our mobile app, available for iOS and Android, and the beloved Fire OS. And yes, that very tinny voice means I am joined in studio by the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to the Option Block program. Sir, it's been a while since you've been in studio.
Been a while, and it's been too long, and that's why I wanted to make sure I got on. If I don't get like a monthly little, my little monthly visit with you guys, I feel like I'm missing out. I need you and Tosaw to not laugh at my jokes so I can remember how not funny I am.
Yeah, Andrew's been hogging all the Option Block love of late.
Mm-hmm. Indeed, he has.
Speaking of Uncle Mike, I think the Skype gods are finally smiling upon him. I think if the Skype gods are happy, we will be joined now by good old Uncle Mike Tosaw from the paradise on earth that is St. Charles. Uncle Mike, are you there?
I am here.
Oh, there you are. I was getting worried for you. I thought maybe St. Charles was just too perfect. It had finally been wiped off the map.
You never know with that.
It is that beautiful of a place. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. A bit of an interesting day, ending up down about 0.5% or so in the S&Ps. A bit of a different story, I guess, depending on where you're looking on different indices. The Dow slightly up about 0.3%. The Qs, the ever 11 Qs, taking it on the chin off nearly 2% today.
Yeah, they slammed the triple Qs in the NASDAQ 100 today. This is one of those days we saw. A few days like this, a few weeks back, like right after the election. This is the first day we'd seen that type of similar action in a while. We had the financials up huge. I don't know if you looked at Goldman and JP Morgan and even the intermediate banks. Goldman at one point was up $6 or $7. JP Morgan was up big. Bank of America, how about Bank of America? Earlier in the week, on like Monday, some dude came in and bought the expiring tomorrow 21.5 calls 100,000 times for 2 and 3 cents.
Amazing how that worked. Did it happen at like 2:55?
No.
Was it Ogre running in and saying, "How are these now?"
It happened earlier in the day. I piggybacked it. I saw those. You could buy the 21 calls for 9 cents. So I bought 100 of those and dumped out of the rest of those today. I sold them at 19, 29, and 75.
Whenever I hear a trade like that, I just have nightmares of a quiet day, nothing's going up. You're about ready to turn off your machine to go home at like 2:55, and the Goldman, or pick your bank, Merrill, I don't care, pick your major house broker, comes running in out of breath and sweaty, and they're at 2 minutes to go in the close. How are these calls now?
And
this terror just goes down your spine.
I mean, the stock went off to the races, but it's not like you didn't have any ways to hedge it. I mean, this went up Monday. It took them all the way till yesterday for those things to really start moving.
So that's a little better. I'm used to the ones where it happens
overnight.
Instantly in the overnight. You can't even get your stock off.
Clone. How are these clone calls?
You're working your stock hedge, and before you can even hit enter, it's against you, and then you're a miserable
How
person.
are these puts in Elon? Oh, and it kills people.
And then the best is when the same broker comes in for the same customer the next morning on the open to close it in your face when you haven't even gotten your stock yet. I'm just venting from
it's the worst.
From old pain. But that said, do you play a lot? I know you like to look at RVX. So do you play a lot in NASDAQ?
I have been. So today when it was selling off big, I was in there looking for calls to buy. Looked at the December 116s. I looked at the January 116s. And I may have delved into some of the December 116s expiring tomorrow. Maybe just a little. As I think that maybe it'll be off a little bit tomorrow on the open, but I think there's a dead cat bounce built in there somewhere. And so I like the Qs. I like the Qs as a potential put sale versus some sort of long. What was interesting today was this is the first time we've seen the Qs down, and the Russell 2000 was down as well. So not like the Qs, but the Russell was actually getting beaten around. Really, all the strength, the reason why the Dow was up so much, Goldman Sachs and JP Morgan. That was about it. And so there was, the underlying market other than the financials today was a lot softer. But I like tomorrow. I think you got to see it. I like seeing a dead cat bounce in NDX or the Qs and some of these other names tomorrow. I just don't see it, especially if non-farms aren't that bad. Now, the other piece, Facebook. I mean, talk about it. Stock's gone from, 123 down to 115. There's another one I've been dipping in. I think that stock's going to be through the moon eventually. I was out buying leap calls.
So you're playing in single names in Carmen. You're all over the place.
That's not in Carmeline. That's more my PA.
That's in the Sebastian family IRA.
The GMWF, the Greasy Meatball Whim Fund. So if I got a whim on something, I'll buy it. And the Greasy Meatball buys it or sells it within my fund.
A lot of whims.
The GMWF, folks. You can look that ticker up. Yeah, it's going to the moon.
Coming soon to an exchange near you. Uncle Mike, a lot cooking in today's and this week's activity since the last time we've gathered. I have an inkling, I think, what's on your radar, but what's been catching your eye this today and indeed this week?
Well, I think we should slide into that by talking about oil. Ha ha.
How long have you been sitting on that one?
About 2 seconds. That one really wasn't that creative, I admit.
You had better.
Yeah, I think I have. But yeah, I think the big news so far this week for my radar, and for I think everybody's radar, quite honestly, was just the OPEC meeting yesterday. The OPEC nations agreeing to cut supply, and magically oil goes up. Now, whether or not that really happens and they actually go through with it, I'm not convinced it's going to happen yet. I think it's likely that it will, but turning off the faucets and in the money pump, I think it can be difficult to do for someone in the Middle East countries situations, but that's definitely on the radar. I think.
Mike, how much so oil goes offline in those countries. As soon as it hits, $51, $52, when do these wildcatters up in Wyoming flip their pumps back on is my question.
I would say, I don't know I would say right away.
Yeah.
So I mean, I think this is short. I've been an oil bull this whole year. I've been, not so much an oil bull. I've been an XLE bull this whole year. And I have been tarred and feathered and made fun of for my buy and hold position in XLE for my clients. It is up over 20% on the year, by the way, just to mention that. But with that being said, I think this one's short-lived for the time being. I don't know if right now is a good time to get into oil. I'm going to continue to hold XLE. I think it's a longer-term hold. I think you're still wise to do it. I like XLE at this level. I loved it back at 60, but I like it now still. But I would still wait. If you're not in the slippery stuff at this point, I would hold off and get into it on a pullback of some sort.
Yeah, Mike, I like the. You know what I kind of like with where's OIV right now, Mark?
Let's just pull that
We're
up.
We're going to pull up OIV here. This is the VIX of
screen.
oil.
Here we go, yeah.
About 40.
Exactly 40, yeah.
And VXXLE, which there actually is an index, believe it or not.
There is a VXXLE?
I believe there is.
VXXLE.
Yeah.
I've never delved into this one before.
Yeah.
2284. Look at you bringing some little goodies.
I'm the VIX man, guys. Me and Russell, if there's an obscure VIX. So, Mike, here's my idea. What do you think about selling puts in XLE, buying puts? So XLE vol, not that cheap at 22 and change. Decent put sale idea. USO vol, which is around 39, is about the low that it's been over the last 2 years. So what about a put purchase in USO versus a put sale in XLE? You're liking the management style and the quality of the company in of management in XLE better than you're liking the actual underlying, and you know, it's kind of taking the hedge off. Or if you're carrying the buy and hold position, what about setting up a hedge using USO rather than taking off XLE? Because I agree with you. I think XLE has to outperform oil itself.
I would agree on that. The only concern that I had, here's the only wild card that would exist on that, and that's natural gas. Natural gas will play a factor in XLE. Natural gas is at 1 year highs. Actually, I think it made it today even.
Oh, wow.
So that would be the only concern that I would have with that. But to answer your question, in terms of will XLE outperform USO, I think it will for sure. XLE is it's based on how crude oil has done so over the course of the year. Crude oil opened up the year at, let me bring this up, on the mid-30s.
Yeah.
And with crude oil up around the 50 mark at this point, crude oil has outperformed XLE over the course of year to date. So at this point, I would definitely say that XLE would definitely be an outperformer of oil for the next few months. Also, with that in mind, this whole bull market thing we got going, I think would aid XLE as well, along with the wonderful management styles of the companies themselves.
Yeah, and how excited am I for getting to use the term wildcatters for people digging for oil.
How exciting are you? I don't know.
That was like the most excited. I'm not. I mean, how often? When am I ever going to get to use the term wildcatters?
I do believe you used it on the business show not that long ago, one of the more recent episodes.
Well, yeah, but I might have been talking about Villanova at the time.
Maybe. But I do believe you have used it recently.
Wildcatters.
Ironically enough, this is not the first time I've heard you in my proximity use the term wildcatters. So that's a rare occurrence.
Yeah, no, I mean, that was something out of my history book from like my junior year in high school that I did not use. So that was 22 years ago, or 21 years ago, and didn't use it. And then 21 years later, I'm using the term wildcatters.
It all comes back. While you guys were talking, I was looking up some of you talking about break-evens. I was looking at interesting charts coming out here. Someone was tweeting the different break-even costs of the different fields out there, breaking it down by field, which is crazy, but it makes sense. You think about the different ways you actually pull the crude out of the ground. And there's a field in Oman that apparently has to be about $28, but the rest of them get down to the 20 and below level. So you hear all this talk about, and it's mostly in the U.S. with the cost of drilling and fracking. Everything else is higher in the shale sands. But you get over in the Middle East, they can still make it work. You know, here's Iraq. They're saying Iraq's break-even is $11.38. So they could even survive in what do we get down to 23 in WTI for a while there. So I mean, they could survive for an extended period. You know, Oman would be in trouble. They need $28 a barrel. But everyone outside of Oman and maybe some of the shale oil, letting credence to that. You know, to that, I wouldn't call it zero hedge because it's a much more credible theory than that. But the theory that it was the Saudis and everyone else just leaning on all that shale oil stuff that needs, you know, $75, $80 more a barrel to break even.
It's not a terrible, you know, it's not entirely wrong. So although I would say, I mean, the production costs in the Middle East are cheaper than here in the U.S., although shale is getting cheaper and cheaper and cheaper. And with natural gas at highs, remember, natural gas kicks off, you know, an oil well is a natural gas well as a result. And so they're pulling off all sorts of other stuff out of those wells that makes a huge difference. So, you know, one of the things, you know, Donald Trump talks about bringing coal back. the thing that killed coal is not the Obama administration. It's the fact that natural gas.
It's not Hillary Clinton saying she's going to put all those people out of jobs. That didn't kill the industry.
It is natural gas that did him in, not regulation. Regulation didn't help, but it was natural gas.
And other things that are lighting it up. It is the beginning of the month here, so of course it's numbers time, numbers palooza as we like to call it, and it has been, as you might imagine, depending on where you're looking, it was a pretty crazy month, November, for the markets worldwide. We of course focus here mostly on the domestic U.S. options front, and our friends over there at OCC putting out their numbers, saying, surprise, surprise, November the highest ever, not month, but highest ever November for options volumes. I like how they parse that. Highest ever November for makes sense though. We had a few tumultuous events this month that led to a little bit of some options volume. And it's also that's for cleared futures, so we don't care about that. That's a small number there for those guys. But yeah, it was up 20% from November of 2015. Overall volume up 393 million contracts. Surprisingly, even with that huge boost from November, overall the ADV at the OCC still down 1% of year to date so far.
Wow.
And exchange listed volume 383 million contracts. 383,000. That would not be a good month. 19% increase. And equity options, parsing it even further, just a tick under 340 million. That's a 16% increase from November of last year. ETF options drilling down even further. 163 million contracts, increase of 55%. So that goes to show whenever you have these volatile markets, people are flocking to SPY and everything else, and those things really just light it up.
Nice.
And index options, which is kind of a weird demarcation because I don't know where you put SPY. Is it an ETF option or an index option? It's got feet in both camps.
Probably listed under ETFs. Would be
I would think, but that's one you can argue for both camps. So
43 million contracts.
43 million contracts over there as well. So yeah, it's been
that's a huge one for the SIBO, who really dipped into has really taken a big dive into index options. I mean, they've gone aggressively after the Russell. They own the Russell now. They own the SPX. They own VIX. About the only index option they don't legitimately just own is the NASDAQ 100.
Yeah, and of course SPY, but that's multiply listed. But
right.
That's where a lot of the volume goes up too. But yeah, when you see that index options number, that should really be like SIBO plus number because they have 90% of that volume. And you think about those numbers in big contracts like SPX, and that's a lot of size, a lot of size being slung.
Yeah, I mean that there. 43 million is like 430 million if that was all SPX. It's not, but just some really a busy month, a crazy month, and I'll tell you, my theory is the guy who sold the S&P down 105 on election night, he probably got fired.
Is he the same guy who bought dry ships to cover at 102? Is that guy?
It was that guy.
I was talking about that with someone today.
I know him. He's a friend of mine.
And I was trying to explain to someone who was relatively new to the markets how a name like dry ships could go from 5 to 102 to 5 again within a span of a week.
Short squeeze.
Yeah, and they were just completely incredulous. And I pointed out to them, I was like, by the way, someone had to pretty much buy it up at those levels, and their mind just
that had to be exploded. A firm forced by.
I can't imagine anyone chose of their own free will to dive in and cover. Excuse me, at 102, whatever ridiculous level it is. Speaking of crazy individual names, let's get into it and keep on rolling into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the Odd Block, the portion of the show where we break down the weird, the wild, the wondrous, the sometimes downright bizarre. Well, the Rock Lobster gets a day off today, Mr. Greasy Meatball. You're in the Odd Block hot seat today, so get your hot pants on for the hot seat.
All right.
Even though I can tell, unfortunately, that you are already wearing hot pants just for a random Thursday.
I showed up wearing boy shorts.
Very appropriate for the weather we're having in November here in Chicago. But let's kick things off, Mark. Speaking of hot, on Monday's show, Andrew and I, we were actually joking in between shows. Maybe there should be a new rule on the option block where the trades that we roundly mock the most in the odd block are the ones that apparently do the best. Because we were mocking this guy buying just size strangles in XOP on Monday. If you're not familiar with XOP listeners, of course, that is the
expired tomorrow.
That was the thing. They weren't just size strangles. They were size strangles that expired tomorrow. He bought a put spread to the downside. He bought the 38.5, 35.5 put spread. He paid 84 cents for that. And then on top of that, that wasn't enough. He's like, I need to cover all my bases. He saw the infomercial. You make money any market using options. And so then he bought the DEES expiring tomorrow, 41 calls for 59 cents. And we kind of
guess his DEES 41 calls are killing it.
Yes, the DEES call part really. It seemed at first the puts were going to be lighting it up because the stock had dropped even that day. So it seemed like, and we were saying on that show, obviously he needed it to go somewhere, pretty aggressively and keep
2
going.
2 a.m. at the bar trade.
Yeah, exactly.
You don't have to go home. Just can't stay here.
It couldn't stay where it was, and it listened to us, apparently, because it took off to the races. Closing today at 42, when the day we were talking about on Monday, I was trading 39. Got as high as 43 and a quarter.
Are you kidding?
So this thing, these calls were just, he bought them 59 cents. They traded as high as $3.32 today. So he had a close to a 6x winner.
Nice trade,
I haven't had a chance to dig in.
Not as good as my 7x winner with my BAC calls.
Of course.
But, that was nuts. I think, did Andrew write up the BAC ones that I had sent at some point last week?
I believe he did, yeah.
Yeah, those were a huge win. And these ones, folks, here's a tip. Especially in major names and actively traded ETFs, if you see near-dated call buying, guess what? Stock's going up. Because people want that gamma. That's what he was after. By buying, the advantage of that near-dated option is that you kind of take the vega out of the equation, and it turns into an entirely gamma-centric trade. That it converts into a ton of delta, and the guy cleans up.
That from back in, we did talk about it back on October 17th. I'm trying to remember the exact date you're talking about. That was like last week or two.
No, it was a couple.
It was more recent than that.
More recent. So,
but yeah, so you're a big believer in
I think
weekly paper being prophetic.
I think that's the type of flow that's worth taking some flyers on, because it tends to be, the trade is so stupid that only someone who knew the direction of the stock would do it.
So,
That's the way to think about it.
So the clock is ticking so much that only a complete madman or someone who knows exactly what he's after would even dare to consider such nonsense.
Exactly.
It's an interesting filter
to
put on your.
I need to get that one built into Live Vol. The excessively dumb trade.
The complete madman filter. Trades expiring within the next 35 minutes, and see what you can get there. Let's move on to maybe saner grounds. Of course, if you've been watching this one, this sector has not exactly been the sanest of grounds of late. This is, of course, our old friend XLF rearing his ugly head yet again. Well, that's not ugly if you're bullish it, though. It's closing today up about 40 cents, up nearly 2% again today, nearly $23 up there today. Got as high as that's closed right near the high today, so didn't really retreat much. This is a name that obviously does decent paper, about 170,000 contracts a day, doing a whopping 424,000 today. Surprisingly, not as call heavy as you might think, but still calls outnumbering puts about 1.5 to 1. And Mark, I don't think this trade is going to make your complete madman filter, but it is somewhat. It's narrower term than let's say a Jan. It's closer. It's closer than that. We got a nice diagonal going up here. It was the DEES 23 calls going up. Actually, it was straight up monthly DEES. Straight up monthly DEES 23 is going up over the Jan 24. Looks like paper buying Jan, selling DEES. So doing kind of a straight up diagonal / calendar. There is some open interest here on the 23s. There's about 132,000 contracts, so a fair amount. So it could be our friend deciding to do a little bit of the old
taking
up and out.
Off the table.
Taking some money out of the table. Obviously, the 23s are pretty close to the fire right now, so he's probably sitting on a little bit of a decent bump on those over the past few weeks. Obviously, just in the last week, XLF has been feeling the love. It was trading low as it was trading sub 20 less than a week ago. So 3 handles over 10%.
Yeah. So when did he buy those? Click on if you go to the options, you can actually click on the option, and we can see when was the open interest. No, click on the middle.
Middle one, you're here.
And you can see.
Yeah, it was like it was the 15th, and then there's a big spike again on the 17th. So
Yeah. So probably he might have done that trade then.
Which is,
small win.
Yeah, not bad. I mean, it's still, let's see, our underlying was 22.18. So, yeah, not as perhaps as juicy as you'd think, but still.
He made a dime.
A buck, yeah, a dime in his face in his favor.
Yeah, you make a dime 30,000 times. That's not nothing to sneeze
But interestingly enough, the party's not over for him. He's going out and reestablishing out there, taking that dime and putting it to work.
Well, that's the other person. Those are the other people to follow. Do you remember you actually kind of knew in certain stocks who the customers were?
You knew when they were going to roll every quarter, every month, or whatever.
And
there was a 1x2 guy who would come on every month, something like that.
And there were some specific customers that would only come in at specific times, and they were right when they came in. We used to, there was kind of, we called it dumb paper, but it wasn't dumb. It was paper that was hedging, blah blah blah.
Yeah.
Wasn't really
had a seasonality to it.
Yeah, wasn't really using the options themselves to make an opinion. Then there were guys that were really good at using the options to express a directional opinion, and they were right a lot. And you got to know who these customers were. Usually it was JOH that was representing them. But no, I mean, you'd see.
We're just maligning floor brokers of the past, left and right here.
What's Joe Ferreira
Who else?
do?
We can't do Tubby anymore.
Come and get me, Joe.
Tubby's not a floor broker anymore. We could malign him. Well, he is, but he's not a Tubby anymore.
Yeah, I know. So we've got, you would have these customers that were usually right when they made a trade, and a guy that was right and then is rolling his position out and expressing his opinion further is somebody that I'm going to pay attention to. So when somebody does a big roll, when they do a big roll and they were right, I am far more inclined to piggyback. So a roll in of itself doesn't mean much to me unless the guy is consistently right.
So just to clarify, the kind of paper you like to follow, complete madmen. And seasonal quarterly
guys
rollers.
that are consistently correct.
So just the two types of scans you're running in the Carmen line office.
Trades that make no sense.
You want guys trading super gamma exploding in 2 minutes, and you want guys who are a little bit more patient and methodical with their rolls.
I mean, think about that. That 100 lot that I bought for $900 is worth $7,000 today if I sat on the whole thing. Not a bad trade following that madman.
So it seems like there's a big gulf between the immediate madmen and the quarterly rollers or whatever.
You never know.
To be
there's
mined
some crazy
in
stuff.
there.
There was one time I think I was tweeting. I was like, "What's the deal with all this Mosaic stuff?" So I hopped in. I bought a bunch of Mosaic calls, and then the next day, Bear interested in buying Mosaic. I was like, "Sold to you, sold to you, sold to you."
Ah, the whim
That's
fund.
always fun.
Nice to have
the
whims.
GMWF.
Here's a funky one here. Moving on to a name we haven't. I don't think we've ever talked about this one on the show before. Seadrill, ticker symbol SDRL, closing a whopping $3.08, listeners. So up a decent rally, up about 10.5% on the day. This is a name that does, as you might expect, actually it does more paper than you might expect. About 10,000 contracts a day, doing nearly 9x that, nearly 90,000 contracts today. As you might expect, given the upside, about 3-to-1. Calls over puts. What we saw here was a little bit of a funky one. I know Mr. Rocklapser had his eyes on this one. Maybe you were watching this one as well.
I was not.
Today, Mr. Sebastian. I'm just going to assume you were and just throw it at you anyway. Which is the Jan 3/4. This is what we do on the oblog. We just throw out trades. 3/4 vertical going up 1,700 times to start. Looks like a little bit more piled in after the fact, to the tune of about 12, nearly 13,000.
That's a roll.
On the threes. It looks like, obviously, it went up several blocks over there on the ISC, total over 10,000, obviously, going on the day. It does seem like they're closing on the fours and rolling down to the 3/2 because there's about 21,000. It's a weird roll, but again, even though the thing's moving your way, taking off a call that's a wee bit less relevant, and then perhaps
maybe
reestablishing.
It looks like trying to capture more delta. He wasn't happy with what he was getting today, and so he said
he realized the stock's up 10%, and my crappy calls are crappy. They're not doing anything for me.
Why aren't I making any money? Oh, that's right.
And he called his broker. He called the broker who told him, "Hey, buy these calls," and they got him to roll down. And then the broker loves them because they get nice commission. Everyone wins except the customer who could have bought these calls to begin with and would have been a lot happier. A lot happier. Looking back at this name, this one's been rocking and rolling over the past. Up a 30%. in the past, not even month, past about 3 weeks. So our friend was well timed, if not well. His strike selection could use a little bit of work.
Well informed.
Yeah, exactly. If he had only gotten, he needed the stock to double.
I know.
In a couple of weeks.
If he listened to us, he'd be super rich right now.
He would have at least have had a little bit better money in his face. I think this is a rational trade. I want this stock to double in 6 weeks, and let's make that happen. These days, in the post-Trump world, anything could happen.
The Trump world?
You too could be president, sir, if you just applied yourself.
No, you two can't because they're from Ireland. You have to be a
That's
naturalized
true.
citizen.
That's true. Well, Bono, he can get a lot of stuff done. He has those cool shades. Maybe he could. People would vote for him, I think.
Well, Bono?
Right. I write in vote for Bono.
He just puts in
a lot of charity work.
He says I'm Obano. And then people think he's Obama, and then they vote for Bono.
Then they vote for him again.
Yeah,
they might be a little confused when they see an Irish guy with blue shades showing up in front of them. But hey, you never know.
Different type of cool.
Yeah, a whole different kind. Before we go down the political rabbit hole, let's keep on rolling. A name we haven't talked about in a while actually on the show. It used to be one of our favorites. It's kind of hasn't been super exciting of late. It's been moving a bit.
It's not a $3 stock anymore.
Yeah, that's true. It's not a $3 biotech, so it doesn't, or a crazy madman roll. In this case, there is some paper though. This is of course our old friend Ford. They've had a tumultuous period of late, but recently been kind of rallying back and getting some of that back. Closing today up about nearly 4%, or about 50 cents on the day, right around 12.5 or so out there. It's a name that does pretty decent paper, as you might expect. About 50,000 and some change contracts a day, doing about 6x at about 300,000 today. So just lighting it up today. If you're wondering, if you're asking yourself, hey, where was all the activity out there in good old Ford? It was in the weeklies yet again. People like playing in the weeklies in Ford. Weeklies expiring on the 9th. The 12 calls going up. Looks like paper closing out today and doing it with a smile on their face for 54 cents. Starting off, blasting out about 21,000. Total on the day, about 34,000. That's all on about 34,000. It's funny how that works. About 34,000 open and about 34,000 going up today.
Closing his position.
Stock obviously about half a buck past that strike, and he's doing it a couple cents over parity. Yet another good sign that he's not really concerned at that point about giving up a few cents here or there.
When did he buy those?
You're making me click in again, sir. You're driving me crazy. You're going to crash my whole screen here.
He bought them yesterday.
Exactly. This should have come up on your Madman filter.
It should have come up.
How did you miss this?
I need that filter. What did he pay?
I had the Ranger.
14.
It was somewhere in the 16 to 27 cent range.
Nice. So let's say he paid 20. So he more than doubled his money.
Even if he paid 27 cents, he's still smiling.
For him.
Yeah, there you go.
For him. Hey,
you guys start running your Madman screens. You too could have been up.
That's a great screen. That's actually a really good screen. Out of the money calls in options that expire in less than 2 weeks.
Complete, utter madman screen.
Who cares about decay screener?
I think listeners, if you're going to do that, maybe you want to back test that one a little bit first before you put all the family fortune in that screen.
You need to make sure that it's opening, that it's there's no stock tied to it. It's not a simple filter. It sounds like just buy it. A lot of it could be a short seller who was doing call overriding covering. It could be a tied up name, and the guy is doing near-term stock replacement. That's not nearly as bullish. It could be a volatility trade. Again, not nearly as bullish. Or it could be the Madmen trade. The John Hamm trade.
Your old buddy Henry Schwartz in the chat room. He's I don't know if he's liking your Madman screen, but he says the Ford was a straddle buyer yesterday. 15,000 SEP 12 straddles bought yesterday to open. So he's piling in straddle buyers, and he says SEP must have meant D's. And unless maybe they are super.
Is there a SEP straddle buyer as well?
That's pretty. That's pretty. I don't think we even go out. Yeah, we do. Yeah.
There was a big SEP straddle buyer.
See, Mr.
Look at Henry.
Mr. Smarty Pants.
If only
over
that
there.
guy had an awesome
if he had a service,
show and a service that pointed that out. Maybe Henry and I are working on a product together. Maybe one of these I'm going to come up with is the madman scream.
He's also tweeting in the guy was in for 27 cents yesterday, out for 54 cents today. So that was him doubling his money roughly today. So there we go. Hopefully the stream seems to be working again. There were some issues I know on Monday, so hopefully you guys are not having problems. If you are having problems joining us, let us know. We'll make sure. I know sometimes people are having time of year. Technology always seems to get flaky.
Here's a little known fact about Henry Schwartz, folks. So he and I had I
apologize for bringing you up.
He and I had a phone conference call the other day. And just so happened,
don't give out any trade secrets.
My wife had run out for an hour or two, and so I was holding my newborn son. And in the course of a 35-minute meeting with Henry, my son went from very, very active to passed out for the next 2 hours. The sweet melodic sound of Henry Schwartz's voice put little Valentino down. It was impressive.
Speaking of sweet melodic voices, let's get to ours because it's Thursday. It's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
The after show. I'm getting my dose of inappropriate jokes here in the show breaks, listeners. Be thankful you're not here in studio with me and the Greasy Meatball. But you know who else is not here in studio is good old Uncle Mike Tosaw, where he beams in from the paradise on earth every week to dispense some options, wit, and or wisdom. Uncle Mike, which is it this week? Is it wit? Is it wisdom? Or perhaps maybe some belated turkey preparation recipes? What you got up your sleeve this week?
I gave all my turkey prep and all my turkey futures trades a couple of weeks ago. So today we just got to do with some wisdom as best we can.
I could do with a nice leftover turkey soup recipe if you have one lying around.
Oh, really? You have to send that to me.
No, I said I could do with one if you have one.
Oh, I was hoping
I was
to give one
teeing
to
you
me.
Okay, well, maybe not. Maybe after the show.
There we go. Well, today what I want to talk about, markets are at close to all-time highs right now. And some people may be kind of shy about pulling the trigger on getting into a trade because levels are so high. But I just don't want to miss out on this market going any higher. I can't stand it. I need to get in, but I need to have some type of peace of mind as to how to get in and what to do. Now, I've talked about the traditional collar 6 million times on this show, but what I want to give is an update as to this new modified. It's not new. It's been around for a long time, but it's new to what we've been doing over the course of the last year or so. It's this modified collar with which we've been using over the course of the last year or so, how it's been doing and how you may want to incorporate it with your trading. On December 31st of last year, let's say we went long SPY. And at that stage, we initiated our collar. And the collar at that point was for a January, and this was December 31st, 2015. So let's just start at the beginning of 2016. So at that point, we bought a January 2017 205, 185 put spread, sold a January 225, 245 call spread, all of this on SPY, of course. SPY was roughly 202, 203, somewhere along those lines at that point in time. And all of this we did do for a debit. It was for a smaller debit. But the justification for doing this for a debit was that SPY does pay a dividend, and the debit with which we took on this would have more than financed the cost of this spread. Now, why did we do that? The vertical put spread with which we did, whenever you do a vertical put spread, you're actually selling, not always, but typically with the volatility skew that's in existence, you're selling a higher vol option than you are buying. So we were buying a relatively or close to at the money put option and selling an out of the money put option. And by doing that, we were benefiting from the volatility skew, assuming we were to hold till expiration. Now, by the same token, when we were selling, instead of just selling a covered call while owning SPY, we did a call spread. And the concept behind this was that we did not want to have, we wanted to have zero downside between a 0 to 10% drop in the marketplace, which we would have had. And we also wanted to have unlimited upside, but we wanted to give up something. We didn't want to, but you always have to give up something when you're doing that. Now, what we were giving up would have been any upside between 10 and 20% in the market, roughly. So with that, this is something that you could initiate with your own trading if it's something that you were interested in. And at a time like now, if you're concerned with markets going lower and you're just concerned that you want to get in, but you're just scared to death to buy the top, this is something to consider. Now, with that, in terms of how it's fared, we were fortunate in the early part of the year to get out of some of those put spreads. And what was happening was that we got in some of the call spreads rather, in early January, and basically all of January, the market really crapped out. That's an advanced technical term, of course. And when that happens, what we were able to do is buy to cover the call spread for a pretty nice profit. And then come September, we stayed in the put spread. And come September, and then we did eventually sell another call spread. But come September, what we were able to do is roll up both the call spread and the put spread. And the overall loss on this hedge between December 31st and September 9th of 2016, December 31st, 2015, September 9th of 2016, I'm just looking at my notes here, we were down 8 cents. And so whenever you have a hedge on a major indice like the SPY, you want it to protect you if there's a downturn, which it did. And you also want it to be able to not get in your way too much if you have a bull market like we have. And 8 pennies is what the overall loss was on this between the beginning of the year and September 9th. Now, fast forward, we were able to roll it up to the September 2017 215, 195 put spread and the 235, 255 call spread. So far, how that's been doing, we're actually down probably about $1 on that at this point. Now, with that, of course, we'll need more time decay to go into effect. We'll need other things to happen to make this one worthwhile. But my point is, folks, is that if you're able to come up with something creative, this spread in particular, which is what we're doing for a lot of our clients that are in SPY for longer term as a longer term holding, it is active, no doubt about that, but we're using longer term options. And by doing it this way, what this enables us to do is have some peace of mind. If SPY has a 10% drop over the course of the year, we can say, hey, it's mathematically impossible for you to lose any money. Of course, if we screw up the trades or get out early or do something like that, well, yeah, you could lose money that way, but you have that peace of mind in place in case of a down market. Now, in terms of what we were to do if the market were to go below 10%, we would have rolled things down, and we had a pretty elaborate plan in place. But quite frankly, trying to protect the asset in a down market while you're hedged, from years of experience, I personally think is easier than trying to capture all the upside when the market's going higher. So what I would recommend considering or looking into if you want to be a buyer of this market would be to look into doing a longer term puts, or buying the underlying, doing a longer term put spread, being long the longer term put spread, and selling a longer term call spread in lieu of doing the traditional costless collar. By doing this, yeah, you do have unlimited downside after a 10% loss. And these numbers I'm saying may or may not match up. But yeah, you do have unlimited downside. But with that being the case, you have the ability to roll down the short puts, or you have the ability to do this magical thing called just getting out. Also, you do have unlimited upside, but you're giving up the upside between 10 and 20%. So with all that, I would encourage you to take a look at modifying a collar and checking this out. If you are looking to get into this marketplace, but you're just scared that you're going to buy the top and instantly start off with a 10% pullback and think, oh, I should have just bought on election, shouldn't have done anything, and I should have bought election day and sold on December 1st, and trying to avoid that type of bad feeling. Now, with that, I'm going to turn it back to the Marks.
I have all sorts of bad feelings after that strategy block, sure, but I'll share them with you after.
Me too.
After the fact. We'll keep on rolling. I'm just kidding, of course. Good stuff as always, Uncle Mike. As we keep on rolling, we got a little bit of time. Let's see if we can squeeze some listeners in with an expedited version of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
You got such a good voiceover
We'll continue our conversation. Mark's jamming in my ear here as we're trying to get the show rolling. That's what danger of having the greasy meatball in the studio, listeners. Of course, it is Thursday. We don't usually squeeze your mail in. We got a little bit of time today, so we thought we would hit you up. First off, following up, close to closing out our question of the week. We asked you guys earlier in the week, very timely question. I wonder how we come up with these. And we asked you, commodities are capturing a lot of attention and generating a lot of volatility. So we asked you, what is your option of choice? I have a feeling the later activity of the week may have skewed this, but we gave you the choices of GLD or the COMEX Gold. We gave you USO or WTI. We gave you, the Eurodollar, TLT or the 10-year. And then for the FX heads out there, we gave you Euro USD and Pound USD. Mr. Greasy Meatball, you haven't had a chance to weigh in on this yet, so I'll let you go first. What is your choice, and what do you think is winning with 1 day to go here in the poll?
I'm going to say oil.
Going out on a limb there.
I'm going to say oil is winning.
Yeah, and that's both of your choices are oil. Uncle Mike, I think you leaned in on gold on Monday. Did you not, or did you say oil?
I went with gold and gold, but I'm going to change my answer to the audience oil, gold for me.
Audience oil, gold for you. And if I can get you the up-to-the-minute results, I will do so. I think, I was leaning. I thought oil would run away with it, and for a while there it wasn't. And then it was. And then surprisingly, it is not yet again. Gold taking it right now with 44% of the vote. You think all the WTI and USO and everything else this week, OPEC would have made a runaway for USO and WTI. Only a third of the listeners choosing. You know what it was, Uncle Mike? If I had put XLE in there, then it would have won, correct?
Of course. And you know what? I apologize to our audience, and you reaffirmed my faith in the intelligence of our audience. My apologies,
you
listeners.
Thought they were just feckless, going with the whims of the market, like Mark's whim trading account. But no, they don't scan for madmen. They do deep analysis before they answer our polls. If you haven't voted yet, you got about a day or so left to do. Get your voice. If you're a big fan of TLT or you're a big FX guy, get in there. Defend your product because they're getting scorched right now. All right, let's move on to. Let's see. Here's a good question from Go Who's. I guess it must be like an Indiana Hoosier backer or something. He wants to know. He says, if I buy 10,000 XYZ calls at $1. And that XYZ, everyone's made and lost many fortunes in XYZ. And then he turns around and he sells these mythical XYZ calls for $2. Mm-hmm. And he says, who loses that $1 million that I just made? Does it the market makers who make money on expired options premiums? Thanks in advance. It's a good question.
That's a very in-depth question. It's not as simple as it seems.
Let's start off with maybe the basics of how an order like this goes up. He says 10,000. So that's a little bit different than your 10 lot that your Aunt Agnes is going to put up. She's going to hit that button to go straight through her retail broker, and it's kind of executed automatically on some exchange or on some market maker's terminal or on their screen, and it's not even noticed. But 10,000, they're going to notice that. They're probably going to have to work that. Probably going to have to facilitate that with some broker. But long story short, market makers are taking down the other side of that unless there's a big facilitation, in which case a customer will be on, maybe a good chunk of that as well, in terms of an upstairs customer. But still, you're right. Technically, you're correct. The market makers are out that $1 million.
Yeah,
but
whoever took the other side.
Exactly.
Right?
But realistically, as we said before on this show, options are not really a zero-sum game, particularly when you're talking about market makers. In the usual scenario, what they're going to do, you don't specify, what delta you're talking. But let's just say, they're going to trade these delta neutrals. Most of these guys are going to put these up. Probably, maybe they're going to fade it a little bit, but they're probably going to put them up delta neutral. So they're going to put on a delta hedge to offset the directional risk that you're talking about. And hopefully in the interim there, the deltas, they're hedged, and now, of course, they have gamma, and, of course, they also have the opportunity, hopefully, to spread that out in that near term. So it is a possibility for both of you to win, or both of you, indeed, to lose, depending on how the market makers hedge. This notion, Mark, I know it's kind of popular out there, and technically they are a zero-sum game, but the reality, the nuances of the market are that hedging is where the rubber meets the road, and depending on how they hedge, they could be laughing all the way to the bank along with the customer.
Yeah, I mean, that's the whole thing is that, who in the technical sense, if you just look at those options, that's who lost. But if you consider that there's hedging involved and all sorts of stuff, there can definitely, that cost can defray all sorts of different ways because, the market maker sells the calls but then buys stock. And so his stock wins, even though he loses a little on the calls, he is a net winner. The New York stock specialist sells the market maker the stock, but he may have been long it and in selling that at a profit. So it's a rabbit hole of who loses, but in the black and white, very simplistic, just that straight up order, it's whoever took the other side. But in the long form, it's not that simple. I mean, think about this. If you buy your house from somebody and live in it for 20 years and then sell it to somebody else, then technically the person that you bought your house from 20 years ago lost on the trade. But did they really lose?
What is the house gamma these days? 20 years, pretty low.
I mean,
it's
that, but that's really kind of the way to think about it when you're looking at who loses and wins. Is that everybody has so much different duration, what their angle is, what they're trying to do, that it's never a simple answer. Now, in his XYZ scenario, if he bought XYZ calls for $1 that expire tomorrow, and then he sold them at $2. Guess what?
Bringing it back to your madman.
He won.
Your madman filter.
The market makers lost in that trade.
He would have come up on your screen, and then you would have piggybacked on him. Everyone would have been happy.
I would have totally piggybacked.
The market makers would have missed their stock. They would have been pissed. They would have got run over.
Yeah,
it would have been a rough scenario. Uncle Mike, anything to add there, sir?
Yeah, the only thing I would add to that is that it's also you can say the same thing if those XYZ calls were to go against him. Let's say that he were to lose 50 cents on those 10,000 XYZ calls. With that being the case, the person who, let's say that the market maker, who sold those calls against him, or who he's bought the calls and the market maker sold the calls, he may not have made money on it, because let's say he was just doing from the simplistic form a covered call. Well, if the stock went down $50 and the option only went down 50 cents, then that covered call that he was long, and let's assume that he did absolutely nothing to manage his risk, then he in theory could have lost a lot more than that. So it's not from, like you agreed, Mark, it's from that standpoint, it is zero sum, but there is more to it than that, not only for the winner, but also in case it's a loss.
Yeah, it drives me crazy whenever I hear people saying these markets are zero sum, because there's so much more nuance to it than that, but of course, often not time to explore it. Thankfully, we have a show to do just that. And it's time for us to keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, this is, of course, the portion of the show where we tell you what we're keeping an eye on for the rest of this week into the old weekend. Unfortunately, nothing as exciting popping off after the bell today as on last show when we had Thor Industries, Mark. The epic Thor Industries to break down. We missed it. I'm so sad. We'll have to put it in our rotation. Just one of the best names out there, I think. I don't know if they have a product called the Mjolnir, but I'm going to put in for one if they.
It'd be neat if the CEO made the earnings announcement with a helmet that had wings on it.
He said, "Buy Odin. Here are our results." That's a company I want to buy stock in now, just for that. That's a good way to pick stocks, right? That works.
We had a Loki-esque quarter.
Our numbers were doing good, then Loki showed up and stole everything and killed half our staff, and now we're back to square one, unfortunately. That must be a huge high risk factor for that name, I would think. All right, moving beyond the majesty of Thor Industries. There is a little thing called non-farms tomorrow. Mark, you heard of that?
Yes, NFP.
Yes, it does come around once a month or so as the clock ticks, as the crow flies. It hasn't been the big thing, but lately it kind of has. So it might be interesting to watch. This is, of course, the last one before Miss Yellen and company are ostensibly going to do something. So if there is one to keep an eye on, I mean, wouldn't it be ironic if they had those last few non-farms that kind of knocked it out of the park, and now they're all set to raise, and this one just stinks up the planet?
It's not. I don't think this one's particularly important. I think
unless it stinks up the planet.
Unless it absolutely stinks up the planet.
That would be interesting.
If it adds some doubt to interest rates, that would be interesting.
How ironic is that, where if we get in a scenario like that where it's so terrible that they probably won't raise, and we might have a panic and a market sell-off, which is interesting.
Crazy. They're going to raise rates, though. I think the most interesting thing I'm watching is correlation. It has been such a new... for so many years under Fed fiscal policy, where really the Fed was fiscal policy, correlation has been near 1 between all the indexes and between stocks. Now we're actually seeing that stock picking matters, that index picking, that sector picking matters. And so what's going to happen to correlation? That's really the key. And that is what I'm going to be watching.
And Mr. Uncle Mike, what are you watching for the rest of this week, sir?
Well, not only at the S&P as usual, but the financials. XLF had another big day today. Just curious to see how they react to the non-farms tomorrow. That normally I just typically look at SPY at 7:30 in the morning Chicago time to see how that's reacting. But tomorrow I'm going to have to be having multiple ticker symbols because I have a burning curiosity to see how the financials react to that. Also with XLE, it is at a pretty high level right now. It's at a new one-year high. So curious to see if that one can continue. I do think we're in for a little bit of a pullback on XLE, but over the long term, I still like it. But oil and financials, slippery money. That's what I'm watching until our next show.
Slippery money. Look at you getting all punny. That means the week is coming to an end for Uncle Mike, and indeed for the option block. Don't worry, more shows tomorrow if you are hard up for options content. But this show, unfortunately, is winding to a close. There we go. Waiting for that music to kick in. Before we go, though, one last time, let me go around the horn, check in with each of my cohorts, see what they're cooking up that may interest you. Let's start in the realm of all places, greasy and madman scanners. Mark, in addition to scanning for the ultimate wild men out there in the options market, what else are you up to in the land of the Pitt and Carmen line?
Yeah, actually, we've got a presentation, a 4-hour Saturday class next Saturday, the 10th, and it's going to be on trading options with interest rates rising. People have not traded with rising interest rates.
The revenge of Roe, that's what we should call it.
Yeah, the revenge of Roe. I mean, rates haven't risen in 20 years. So how does this stuff really affect what you do? Go to optionpit.com/events to check it out and sign up.
I've been waiting for that moment, that inflection point where we would start seeing effectively Roe webinars, and maybe this is it. Maybe this is the cusp, the inflection. You know, rates are going to go up when we're starting to see Roe webinars out there on the horizon. Check it out. If you didn't get enough of the Greasy Meatball and the Rock Lobster this week on the shows, then check them out over there, optionpit.com, to learn more. And Uncle Mike, what's cooking in the land of all things RCM alts / advisors / MISC / going long?
Lots of things cooking, Mark. Primarily, if you are looking for a financial advisor going into the end of the year to discuss tax, sales, and things of that nature, feel free to contact me. If you do have option trades on the books, more than happy to advise on those as well. Feel free to contact me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
All right, everybody, on behalf of Uncle Mike and the Greasy Meatball, and indeed myself, we shall, one more time. This thing is going crazy. Here we go. Let me, of course, thank you for downloading, streaming, and subscribing. For those of you who can make it through some of the issues on the stream to join us live, we welcome you guys as well every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixler. And we'll see you next week for more of the Option.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.